Good morning, MMTs. It's a beautiful Saturday. Spring is almost upon us. St. Patty's Day weekend, and Amazon is probably selling a lot on the internet like it does. Now, let's talk about the Amazon trade that we have done so well. And why has it been that way? It's for the following. This was the lower support levels on Amazon on the weekly level. And we said we could trade up to 277.50, and we got up here and the 280 puts paid bigger than money. They ran this up on a weekly level to that major top of resistance, and they sold it right back down and made a lower low than the previous week right here. And they did. Not only that, Amazon had a very nice downgrade. I think it was JP Morgan. But we're falling below the 10-week moving average on Amazon. The thing I want to point out to people is when they ran that up to the resistance level, they finally got right here. This was going to be it. And not only that, that $280 put got up to $19.45 on yesterday's expiration, but these were bought very cheap. And I'll show you how cheap they were bought. The 280 put got marked down here to the lows. When we hit that resistance level on that weekly chart, I can tell you that the weekly low, and we told everyone that this would happen and it was a great trade. The low was $4.50. If you had only 10 contracts in our alert service, you made $14,000. That is this contract right here. Let it be known. If you had 30 contracts down there, well, it's a monumental amount of money. And you can see how those puts went up from a deflated area all the way back up in value, all the way up to 22.75 is where they were up here. What I would like, and that was when they were over here now, but we hit the top of it. And the put option paid bigger than big on the 280 316 monthly put. When Amazon hit that major wall of resistance that we pointed out to you, we've had a great reversal, and these were on sale. They went up. This is what we do. When we were down here, they were $4.50 a contract, getting in at $5, $5.20. On that side of the market, you did 10 contracts or 30 contracts or even 100. A lot of people do that we have. You made a monument of money in this trade. This was a deflated 280 put. Watch this. Weekly chart, AMZN. When we hit the major resistance, that 280 put came in at that $4.50 wholesale price, and it would work. They had squeezed their shorts up to the high to unload Amazon, and they did extremely well. That is the recap on the 280 put that paid big money. Now, let's take a look at the fact that they bought $100 million worth of stock on the dip, because they did. So they started finding our $260 level attractive. This stock, the amount of correction, do the math, MMTs. Here's the high. And we said 277.50, and the high was 277.40. We were close enough. They got a little bull move out of it, and then it collapsed, like we said it would. This is why you always stick with the trade management. When it's ready, it will perform. They all do. They all will. They always have. It's just that you might not know how to do it, but we do know. It's time to get on that alert service because it would have paid you a lot of money. Get in the MMT school. Get involved. Here is the weekly chart on Amazon. Now, the 20-week moving average is at 256.14 cents. That's the red line. Amazon is at a major support level. And let me show you what that is, MMT. Trend tool goes right across there. That's the high of this weekly bar on 12/30 of 2012, the last trading day of the month. They gapped it up. That's this lower trend line right at that 20-week moving average. And every time we get down in that level, we got a nice pop up here to a double top weekly reversal. Made the high, kind of sold down a little bit, but then that wall of resistance, we knew exactly where that was going to be. And we were using our market maker application. Once again, I'm giving an alert that the resistance levels will be at 267 when this thing broke below its 10-week simple moving average. That's going to be your resistance level now. And 267, it just happened to be the high of the day. And when you got below that, that's that 10-week right here, you sold right down, and now we're going to test that 20-week. What we will be looking at is how to steal the $255 call next week. They're still, they were marked down. They have a $4 range. It took the premium from 11:30 to 7:30. That's in the wholesale camp, but they can go lower next week. And we got FOMC meeting out, lots of data. A lot of retail stuff is going to be coming out next week. And what is really Amazon? A big part of their business is retail, isn't it? Yeah, it is. One of the most well-managed companies out there year to date. But the problem is the multiple is very high for Amazon. And I can tell you that it was a nice reversal. We'll be looking at the 255 call next week. Another thing that we'll look at within the ranges, if they go for 322, 260 call at 430, they marked these from 850 to 360. That's almost $5 range. Yes, they're getting cheap. Based on what Amazon will do, we only will make the market intraday on the call side, on the lower end. But we will also, if we travel up to the 10-week moving average, we'll go right back to the 270 put and look at that MMTs. And that's going to be this one right here. That's the wall of resistance. So the 270 put, which was up from 530 on the low. They marked it from the close to our wholesale entries. Then they mark it up almost to the $10 level. But you see, this particular side of the trade is that resistance right here on that 10-week moving average, and that's why that 270 put will come into play. So now we have the call and the put side and the trend of Amazon and the support levels, and there will be intraday ranges. It had a $7.21 range to the downside versus the bull side. The bear side has come right back, and it's going to hit at a major support level where Amazon likes to bounce. If the 20-week moving average holds down there, then we will get a good bounce back up. So it'll be in a range. It'll get down there to, 256, trade up to 261 to 262, where it is right about now. We travel down there and hit that. That would be a new resistance level, would be the last print here. So 10-week moving average, irrespectively, is a wall of resistance. There's lots of great plays moving forward. It's still in a bull run. It's overbought on a weekly. They are going to sell off. Everything that we've done today will do exactly what this one is doing. The LinkedIns, the Netflixes, and there's even many more.